My name is Jake, welcome to the channel. If you're like me, you have to work at a day job to pay for your living expenses. You have to go to work 9 to 5, Monday through Friday, maybe you work on the weekends, but you're required to go somewhere, exchange your time for money. Because if you don't do that, you're not going to be able to pay your rent, your mortgage, your car payment, your food, and that's how life works. You exchange time for money so that you can go and do other things that you would like in life. That's kind of how we're taught as kids. Go in, go get a job, put in your time, check out, enjoy the weekends with your friends, and rinse and repeat. Do that until you're 65 years old. And then when you're 65, you can then finally go and do things that you want with your time. You can travel, you can go start a new hobby, and that's how life works. At least that's the life that I grew up learning when I was in school. If it wasn't for a simple concept called passive income, I would be living that lifestyle. Because my wife and I understand the power of passive income, we're able to flip the script and do things on our own terms. If you're like me and you don't want to work for your entire life and be required to do something, be somewhere, do something off of somebody else's terms, you're probably going to want to watch this video. A couple years ago, my wife and I were exploring the concept of retiring early. We follow the movement here, which is called financial independence and retire early. The retire early part is a little bit optional. We're really focused on financial independence. Once again, it comes back to that option to choose, right? Where maybe you're having a bad day, you would rather do something else, but because you have no other choice, you have to go to work. You have to be somewhere. You have to put on your smile. You have to dress up and do whatever somebody else says. For my wife and I, it's all about the financial independence and the freedom to choose what we do with our time. Over the last couple of years, my wife and I have been building up our portfolio so that we can one day quit our day jobs and then live life on our terms. And we're able to do that because we invest in a dividend growth strategy. We invest for cash flow from our passive investments. If you're new to my channel, my wife and I are in our mid-30s. We're looking to retire here in the next 5 years, by the time we're age 39. In this video, I want to share a few things that you should be considering if you're looking to retire early or at least reach financial independence through dividend investing. I'm going to cover 6 topics that are going to help you on that path. The 6 topics that we're going to talk about here are not all encompassing. These are 6 topics that have been very important for my wife and I as we've strived to reach financial independence through dividend investing. So the first topic that we're going to talk about is actually starting. Half the battle is starting. The second topic is going to be understanding your goal. Understand your why. Why are you investing? The third topic is going to be around inflation. The fourth topic, we're going to talk about dollar cost averaging. And when you're investing, there's certain metrics that you should be looking at and what those metrics would look like. The fifth topic is going to be around understanding how dividends are taxed. You don't want to be giving away more to the government in taxes than you absolutely have to. The sixth topic is going to be around the vehicle that's going to help you to get to your destination, the investments that you're going to be investing in, whether those be individual stocks or ETFs. If you're looking to replace your day job with dividend investing, it is absolutely essential that you understand every single one of these topics. Whether you're a seasoned, experienced investor or a new dividend investor, it's important that you understand these topics. In the description below, I'm going to leave a link to each topic so that you can check out and learn more about the topic if you would like. Over the last couple of years, I've dreamt about the day that I can officially quit my day job because my dividends are now paying for my living expenses. And I think about to myself, what will that day look like once I finally reach my goal so that we no longer have to rely on our day jobs? It'll probably look a little like this.
Guys, what is this? Guys, all of you out right now.
Jared, I'm here to tell you that I'm quitting.
Oh my gosh. I love it how he raises his hands and just walks away. And then you see the manager in the background just like, oh, all pissed. Oh man, I love it. All right. So the very first thing, the half the battle is starting. So this could not be more true. If you're a new investor and if you haven't started, or if you're saying, hey, I'll start maybe next year or later, my experience is if, unless you start right away, you're going to have the same issue of not starting 6 months from now, a year from now. So the best way that I found to start investing is to make it as easy as possible. Automate your investing as much as you can. Pick a brokerage that is going to help you automate your transfers from your bank account. Try to do it on at least once a month. If you're able to do it more than once a month, that's great, but set a goal to at least do it once a month. And when you're first starting out, there's 3 things that I always talk about on the channel. If you're a long-term, subscriber of the channel, you know this. I always focus on these 3 things: staying out of consumer debt, looking to cut your expenses. If you're paying too much for your phone bill, look for other alternatives, for example. And then the last thing, look for areas where you can make more money. Those are the 3 things. And then what you do is you then invest the difference. And what we call this in the FIRE community, we call this increasing your savings rate. The savings rate is a little bit confusing because it's actually the amount that you're investing. And if you want to learn more about focusing on your savings rate and how you can increase your savings rate and why that is so important, there's a link in the description below where I talk about why I invest 70% of my income to retire early. Next, you really want to understand your goal of why you're investing. A lot of us are investing simply because we feel that we're supposed to. Maybe we don't understand why, but we invest anyways. The sooner that you can understand your goal when you're investing, it can be so powerful for your long-term success. There's typically 2 ways of investing, at least the way that I view it. There's the way of buying something low and then waiting and then selling it for a gain once the price goes up in the future. Buy low, sell high. The other way to investing is you're buying something, you're holding on to it, and that investment is paying you either every month or every couple of months in the form of a dividend, a distribution, rental income, whatever it may be. Those are the 2 different types of investing. And in the stock market, the way that I love to invest with dividend investing are investing into companies that are paying me to be a shareholder of their business. If you want to learn more about investing and understanding your goal, I'd recommend checking out the video below where I talk about dividend investing guidelines for long-term success. The next topic is around inflation. Inflation is everywhere. It's in our consumer goods. It's in our discretionary goods, right? For when you go to the store, you buy that gallon of milk. That gallon of milk costs more today than it did 5 years ago. The big thing when it comes to inflation and your dividends is around your purchasing power. A lot of people, when you're planning your future here in the next 5, 10, 20 years, and you're thinking, okay, well, how much money am I going to need in 20 years? The answer is we don't really know. And so the only thing that I can say here is use your best guess. And it should be an educated guess. If we understand that the inflation rate is anywhere from 2 to 3%, we should plan on, if our time horizon is 10 years or 20 years, that should be adjusted for inflation. So that same $50,000 that you're going to need today is not going to have the same purchasing power in 20 years. But here's the beautiful thing about dividend investing is the companies that we're investing in, especially the ones that I talk about on my channel, are giving you a pay raise every single year. So I'm not talking about investing into bonds. I'm talking about investing into businesses that have pricing power that can increase prices as inflation goes up and reward me as a shareholder in the form of a growing dividend. That's the cool thing about investing in the stock market into wonderful businesses. It actually is a hedge against inflation. If you want to learn more about inflation, I'd recommend you check out the video below under this section. The next topic around dollar cost averaging with specific metrics in mind is very important. So if you're investing into the bond market and you're investing into bonds over a 10 or a 20-year time period, it's going to take you much longer than it would, for example, if you were invested into equities or the traditional stock market, right? Companies like PepsiCo, Coca-Cola, Johnson & Johnson, every single one of these companies is growing at a different rate. And if you look at that over a longer period of time, you can see kind of a trend depending on the type of industry that a company is in versus, how quickly or how slowly they're growing. For example, if you were to compare Microsoft, if you were to invest into Microsoft for the next 20 years, you're going to get different returns than if you were to invest into a utility company, right? Or to an energy company. So understanding that the metrics or the numbers around how quickly an investment is growing really dictates how quickly or slowly your investment is going to compound and grow over time. So as a quick example, if you have 20 years before you're looking to live off of your dividend portfolio, you obviously want to focus more on the growth aspect of your investment. You want to invest into industries or businesses that are growing at a faster pace. Maybe they pay a lower dividend today, but due to the power of compound interest and the miracle of compound interest, you're going to see a higher return over a longer period of time. Now, contrast that with somebody that maybe is in the example of my wife and I, where we're looking to retire in the next 5 years. We're focused more on an investment that pays a higher starting yield today. So we want a company like Coca-Cola where we're getting a higher starting yield today, where we don't have the time for it to compound and grow like a company like Microsoft or Apple. This is a very important topic that every single dividend investor must understand. I would recommend checking out the video linked below where I talk about the simple math behind retiring early with dividend investing. Because dividend investing is a taxable event, it is so important that you understand how your dividends are taxed. Not every company pays the same tax. Not every company comes with the same tax treatment, as well as not every single account is going to come with the same tax treatment. I cannot stress it enough how important it is that you understand how your dividends are taxed. If you're a new investor and you're just starting out learning about dividend investing, this is an absolute must that you must understand how your dividends are taxed. I don't think I've ever met somebody that just says, I love paying the IRS taxes. I love paying all of my money away to the government. That really doesn't happen, at least to your normal person. If you want to learn more about how to pay zero taxes on your dividend income in early retirement legally, I'd recommend you check out the video in the description below. And lastly, you want to pick a vehicle that's going to help you get to your destination. Now, what do I mean by vehicle? A vehicle is the actual investment that's going to help you reach your goal of financial independence, or whatever your goal may be. But the vehicle or the investment, that could be, any type of asset class. That could be a stock, a bond, real estate. It could be oil. It could be a different type of commodity. It could be gold, Bitcoin, whatever it may be. There's so many different asset classes out there. It's important that you understand what you're investing in. And me personally, if you're just starting out, I wouldn't overcomplicate this. I personally would just focus on individual stocks and ETFs that invest into equities. And then later on, if you want to focus on hedging your portfolio with other asset classes, be my guest. But if you're first starting out, I would really focus on keeping it simple. I get asked all the time, Jake, is it better to invest in individual stocks or ETFs? The answer is that it really just depends. There's pros and cons to both, and every individual investor is different. Answering that question with a blanketed answer is doing a disservice to all of you watching, because every single person is in a different situation when it comes to their risk tolerance, their understanding of the stock market. And so when it comes to buying individual stocks or ETFs, I'd recommend checking out the video in the description below where I go into detail talking about the pros and cons of both. And lastly, it is so important that you understand that you're investing based off of your time horizon. Your time horizon dictates the different types of investments that you should be investing in. Now, this is under the assumption that you're understanding how you're investing, right? The second topic of this video was know your goal or your why, if you're buying low or selling high, or if you're going to gradually grow up your portfolio. If your goal is to slowly grow up your portfolio and never sell your shares, I would highly recommend you check out the video called the Dividend Starter Pack, How to Invest Based Off of Your Time Horizon. This video is probably one of the best videos that I created on my channel, where that light bulb goes on. It's like, I get it. It makes sense. So if you're a do-it-yourself investor and you're building out your portfolio yourself, you're not relying on a financial advisor, I would highly recommend you check out that video, because it's going to help you a lot, especially if you're a new investor. I mentioned at the beginning of the video that these 6 topics are not all-encompassing when it comes to replacing your day job with dividend investing. But I promise you, if you're a new investor and your goal is to replace your day job with dividend investing, understanding these 6 topics is going to help you so much to get to your goal faster. Thank you so much, everybody, for watching. I hope you all have a great 4th, and I'll catch everybody in the next video.
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.